Hi, Randy Finney with Right Side of the Chart here. Today is Thursday, February 11th. Doing this video in pre-markets about 8:30 Eastern, it's about an hour before the open, and there's been a lot of movement in the futures overnight. Trade ideas have been very light lately, as I suspected. We've been in a trading range for the last few weeks, so I've been keeping it light. A lot of very few, if any, official trade ideas, but in the trading room, most of what I've been focusing on is the mining stocks and the broad markets via GDX. I'm sorry, QQQ. The Qs have been the leading index throughout this entire bull market. They led us up and got ahead of themselves, so naturally they've been leading us down. And I still, the rest of the market tends to take direction from the Qs to a large extent. So either way, let's keep this video brief so I can get it posted before the market opens. I'll share my thoughts on what's going on today. So let's start out what I'm talking about if you're watching this video and you're just waking up and haven't really tuned into things. This is pre-market. This is a QQQ right here. This is a 2-minute, 20-hour chart. In other words, 2-minute candlesticks over the last 20 hours of trading, including pre-market and post-market trades. So what you see here, these solid gray lines are daybreak lines. So this is yesterday's trading action. Pre-market is shaded. So you have the pre-market yesterday's regular trading hours in white, and then the post-market trades here. And then this is this morning. So look, when I woke up, checked the futures, things were looking real ugly as far as a gap down. I just mentioned in the trading room, I shared my thoughts, and I'll share them here in this video. You can reference. Recently, I put up a couple charts, daily charts, with a support zone, and we'll get to that in a second. At 94.49, and it's been my experience that both individual stocks and the broad markets will often hit those key support levels or targets, price targets that I've had. I've talked about this in the past. If I have a trade idea and I'm targeting, let's say on a short trade, I'm moved down from 100 to 90, let's just say. I'll often set a standing buy to cover order at 90, and I'll have that with the criteria, let them fill it after hours outside the regular trading session. And that's because you want to hit your targets and get out. But on the stop side, I won't allow them to fill stops after hours, because what happens in the after hours and pre-market sessions, you often get these overreactions. Trading volumes are very light. But I want to make the point that this is an errant candlestick. This one wasn't a true trade right here, this long wick that you see. This was a trade. We traded at 94.49 today at the lows. Call it coincidence, call it what you want, but this is the top of my support zone. Again, this chart's already been posted. So what it will look like is we hit that, and that is, I've been stating for the last week or so, I could see the possibility of a little more downside when we're up here. We fell shy. And these target levels, there's a big gap. What I was really looking at, there's several reactions on this support zone here, but there's a large gap from back in looks like the October 21st gap in 2014, and that's also where trading normalized. I often talk about this, especially on the Qs. This candlestick was just sort of a mini crash, didn't reflect what happened in the NDX. So this is where trading normalized that morning back in August when we had that big meltdown earlier. And again, this is a pretty formidable support zone, and so we kissed the top of it today. Now, sure, we can open, pop, move down. Again, as I'm doing this video, just take a look. So we hit that, and we've immediately been moving higher. So far, bullish action. As I mentioned, I'd be more apt to buy this gap down than to sell it. So that's what we're looking at. Now, if we, sputter out and move back lower, it would be a solid break, especially close below the bottom of the support zone that I have, and that comes in at, I don't have the number up above, because when you do that, 93.86 it just overlaps that number on the top. A support zone is when I have two support levels very close in proximity, so it's really a zone. Either way, that's what's happened, and we've hit the top of that gap. Now, what you'll notice too is it's not very big. It's smaller than most divergences I like to see on the daily time frame, yet it is bullish or positive divergence so far. Point being, if we hold right here and have a nice rally off of the tag of this support level, whether it's that pre-market tag, whether the market opens, makes another thrust down lower. I could flip a coin and say whether that's going to happen, but I do favor a reaction off this level. I want to make clear on that now. Okay, so that's where we go. I'll try to get into that more. Let's talk on the other thing right now, and that's gold and the miners, because I know there's a lot of trading interest in the miners right now. It's been a huge run in gold in the miners. So let's just go ahead and take a look at gold. This is gold, and this is a daily time frame, and you can see this is a resistance line. This is that previous reaction high. Now we're poised to gap above it. However, River Birch in the trading room this morning, made a comment, and we're looking for, this is a parabolic move. Parabolic runs don't last forever. And River Birch had stated, which I agree with, I didn't see it coming, but a fake out move, it looked like we had topped here. I made the case, obviously, ad nauseum lately about, there's a good chance that gold and the mining stocks topped the other day when the miners put in that gravestone doji. We're going to take that out again this morning, but that may very well be a fake out move. And when you look at this parabolic run, and if you've traded for a while and you're used to what a parabola looks like, or a parabolic move, I should say, more accurately, a parabolic run in a stock, is especially an ETF like this, or a well traded commodity such as the GLD, they don't go on forever. And the move, the most important thing is, here's one right here, the move, just like in the miners, I expect will be equally as violent on the downside as it was on the upside. That's just the case, especially in the mining stocks. Now, this I referenced in the trading room this morning in my response here. This is gold, and I remain longer-term bullish. I've stated for going on a couple of years now, these bullish divergences have been forming, and this is a major support zone. We haven't quite hit that bottom of the support zone. I did add another line here. But more importantly, I've stated for quite a while now, this downtrend line I've been watching. And, my thoughts are, and I've stated in the past, that if and when gold solidly takes out this downtrend line, I know that's not off the highs, but there's more reactions on this downtrend line. This has been sort of I wouldn't call it a bullish falling wedge, I call it more of a contracting price channel, but numerous reactions so far in this in the bear market in gold. Now we're going to open up right to that trend line. And here's my point. Number one, an extended move into resistance. Yes, I've pointed out, moves into resistance lately on the miners, as well as gold. We went through these, but this is a weekly chart. This is the big deal, the big boy. And I don't think that we're going to make a solid weekly close above that trend line, even if we just barely, let's say we close on it, we're closing at a major, well-defined resistance level. So that's number one, the reason why I'm not chasing this rally, even though there's bullish divergences in place. And more importantly, let's just take a look at these rips and dips in gold before. Remember, until proven otherwise, we don't have any technical evidence whatsoever other than divergences that show, we may get an impending trend change. In other words, that the bear market may be over soon, but we, as of yet, price-wise, any metric you look at, slice or dice it, gold is in a bear market. And just looking at the move, and it's not all measured here, we could go considerably lower. You look at gold really where it came up from the, back in 2005, and this bear market could have more downside. I don't think so, and again, I don't want to get off track here, which I'm doing now, and go into the big picture. I've covered that in the past. What I wanted to point out is is the moves in gold. Okay, so let's assume now, until proven otherwise, let's assume this is a bear market rally. Here's some rallies I pointed out. This is in 2013. Now, all I'm going to do is I'm going to capture the low of that candlestick, and I'm using the measuring tool, which if you look in the upper left-hand corner, I pointed these out. There's a 20% rally. That 20% rally was followed by a nearly symmetrical, the move down wasn't as steep as the move up, but it took us down below, or at least to that previous reaction low. Here we go again, another strong rally. And again, if you look at the one all the way to the right, the current rally, these measure, almost as steep. The recent rally was a little more parabolic, if you will. But what I'm pointing out here, there's a better than a 16% gain. Here's a move that started out, had a little reaction, and then a nearly vertical run. It would be a parabolic move if we didn't have this correction in between. Corrections are actually healthier. This is an ABC up, a counter trend move. So there's the what I'm doing again is pointing out that was almost, I don't know if I captured that low, but there it is. Call it right to the top, 14.5%. It's almost 15%. Now, what about this one here? Gold is poised to gap up higher today, so I think it's about 3% higher. So 14.2, add another 3, you're about 17%. So in other words, just another typical bear market rally, no different from the rest. And again, I cannot emphasize this enough. When gold goes up, especially in a bear market, if this is another bear market rally. Sure, this could be the beginning of a bull market, but you can only come up so much before pulling back. This is the point, and this is the point that River Birch made, and I concurred with in the trading room, that you get these moves and it's going to drop almost as quick as it came up when it does drop. And at some point, the bear market will be over, and what you'll have, instead of a full retracement such as all these other moves, look how it's almost perfect retracements. I'm talking the bottom to the bottom here. Although we were stair-stepping lower, each of these sharp advances had, look at the horizontal line from here to here, a perfect retracement. That would, if history repeats, then what we're going to see is something just like this. Now, I'm not calling for that. At least not yet. I am open to that possibility. Remember, when everybody gets bullish, right now there is a pure panic buying into gold because nobody knows where else to put their money right now. Oil is collapsing. Commodities just aren't there yet. The bullish potential is there, but we're just not there. I haven't had those breakouts, at least convincingly, that I'm looking for in other things. So there's a lot of liquidity in this market, and I've warned of implosions into commodities and gold and things like that, or I should say explosions when that money moves out of stocks, and that's what's happened here. However, stocks are at support. Stocks have had a heck of a correction. Can they go lower? Yes, anything's possible. Can gold go higher? Yes, anything is possible. However, big picture, gold at long-term downtrend line resistance. In other words, I put a much higher weighting in a weekly chart than I do a daily chart. The same way I put a much higher weighting on a daily chart than I do a 60-minute or a 15-minute time frame, when prices are at resistance or trading a chart pattern. So that's that. There's gold, my thoughts, and what is likely to happen here. So again, it's going to be ugly at the open. Let's take a look at gold and GDX real quick. Okay, here's GDX. Funny, since I started this, when I sat down and started composing everything, GDX was still ripping higher, and this coincides. Let's look at the time. If you follow at the very bottom, 7:14, there was a top in GDX, and QQQ. QQQ. I pointed out the market's bottomed, and right at my support zone. So that is 6:56. So what happened is the market's bottomed at just before 7 o'clock, started moving higher. And as soon as they saw that, what happened is they started selling gold in the miners, because the miners are moving up in sympathy with gold as a flight to safety. And all of a sudden, as I said this morning in the post in the trading room, gold and GDX are moving almost perfectly inversely in lockstep with equities, and equities are going to lead. They're taking it's just a fear trade. They're running out of the markets. That's why the markets bottom first, and then you see about 15 minutes later, as soon as they realized that stocks were moving up, and that wasn't just a one tick here, one tick there. Look at this. They're running out of they're fading this pre-market gap so hard, and again, there's a lot of downside if the markets bounce, if they mount a meaningful rally, and I'm talking anything. Gosh, even a 3 to 5% rally right now in stocks, which is, I could easily see that happening, would just cause the miners to virtually implode. You'd see a sharp move down. Take it for what it's worth. I've been, tried to catch a few tops that weren't there, and I know, myself and quite a few others have gotten burned with dust lately. So, do your own thing, keep it light, most importantly, and just, as I keep reiterating, don't forget to factor in the leverage when trading dust and nugget. The moves in the miners alone can be 5-6% a day. So you multiply that by 3, and you need to take that into account with your position sizing. So there it is. Let's look at gold just real quick. Pre-market again. You can see gold peaked out this morning right about when the market did, pulled back, tried to go up for another high, and then they realized, wow, the markets really are bouncing. So now they've started to fade that rally in gold. And again, I can't say with certainty where things are going, but I can tell you these are the levels. Oops, go back to the daily chart, and potential divergence there. Support zone, if and when we take out that support zone, I don't see the next support coming into about 91.16 and then down to 84.94. And, I just been clamoring for a bear market and a pulse sell-off for a long time. I just don't think there's a lot more left in this leg down. There's that bear flag pattern. Yes, we broke down from that, and sure, would it measure? Well, let's do it here. Would it measure further? That's ultimately where it measures out to, but what's giving me pause with positive divergences in place. Some other things, I'm looking at support and resistance levels on, or support levels, I should say, on some of the top holdings. But let's go from there. I'll update this throughout the day. I just want to share my thoughts real quick that, shorting or panicking at this point, if you've noticed the move down in pre-market, I just want to point out that, the Qs have hit support and may want to make one run down. Anything is possible, but just watch this level throughout the trading session and the day. And if you start to see the buyers step in, then, there is that potential on the Qs. The Qs, again, been one of the leading indexes. This is a 120-minute chart, 2-hour period chart. And this can help you start to make out that divergence that I mentioned on the daily time frame. When you go to, you don't really see it on the 60-minute, but I do see it here on the 2-hour. You can go to the 4-hour daily chart. So this is what we're looking at, guys. Right now, the Qs. And if this is a bearish falling wedge, maybe they do want to make another thrust, and you would want to coordinate that, or sync those up with those other support levels I have down below. But if we go too much lower, if prices just completely fall out of this wedge, it would have to snap back quickly. The only thing I'll allow for is a brief breakdown and what I call the wedge overshoot. This would be a wedge overshoot and throw up. I don't like that scenario. I'll tell you why, because that would negate these divergences. Any major move out of here, we barely have the divergences are barely holding on now. In other words, on the 120-minute charts, the higher high in both the RSI and the MACD. So a flush out move, although it's possible, isn't my favorite scenario. I'd like to see things hold where we move down to in pre-market trading, even if we make one other run down to retest those levels right after the open, and that would be ideal. And then in which case, if the markets start to bounce and the buyers really step in, that's where I would expect GDX to turn around and move down as quick as it came up recently. Okay, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.